Toronto, we had our Mortgage Professionals Canada conference just a couple weeks ago. And fun fact, Benjamin Tall, the chief economist for the Canadian Imperial Bank of Commerce, CIBC, he spoke, and he says that he thinks that the Bank of Canada is going to start softening the rates June, July of 2024. So we'll see if Benjamin Tall is correct. Let's just mark our calendars here. It's November 2023.
Yeah.
Let's see what happens let's go by July 2024. We'll see what happens.
It's interesting because on my regular talk show on City News 95.7, of course, I have one in particular who's a strong proponent of raising interest rates as being the really one of the key ways to curb inflation. But then I had Jim Stanford on, who's an economist, and he is more center left, and he suggests that it's too heavy of a tool, that it's hurt a lot of people.
I think so, and the challenge is with the Bank of Canada, and we're not going to dive too deep into it this show because we're focusing on financial literacy.
That's right.
But it is a piece of financial literacy, and I think it's good for people to understand what's going on. It takes a long time for an increase that the Bank of Canada does to actually have an impact on inflation. So it takes 4, 6, 8, 12 months for us to really see the impacts of an increase in the interest rate. So that being said, I think they overreached.
You're talking the Bank of Canada.
The Bank of Canada.
Yeah.
And we will see what's coming in the next weeks and months. But I am cautiously optimistic that 2024, by the midway through the year, we're going to start seeing some softening of the rates. But I think that being said, we will likely be probably in a full-fledged recession by then.
Okay, and one of the nice things about it being Financial Literacy Month is that we're going to have you on for a number of times, including 2 live shows.
Yeah. So
in which we will take calls.
For sure. So if anybody's curious, they can listen to us on City News on November 16th and November 30th. We're going to take calls live on the air.
12 till 1.
12 till 1. And we're actually going to have a couple guests on as well. So I think it's going to be a really fun show. We're going to do it live. Normally, if you're listening to us Mortgage 101, we pre-record it. It's on once a month. We still love giving lots of information, but we can't take calls just the way that this format works. But we're going to be doing it November 16th and 30th.
That'll be exciting because when you look back to when this all started, you and I,
it was always
on
a
my
live
weekend show. It was a live show.
It was always a live show.
And we took calls.
We always love taking calls.
Yeah,
so
people love to call.
Yeah, they certainly do. So I think we're going to get a lot of calls, Todd, because it's been a couple of years really since we've done that in that type of format.
Yeah. So. All right. So income obviously is a huge component. Look, when it comes to your finances, it starts with income, right? Let's call it what it is.
If you don't have income,
right,
you probably have problems.
You don't have any. You have no finances.
In some cases, yes. Or in many cases. There's always going to be lots of income. And Todd, one thing that you wanted me to talk about was what are the different types of income?
Yeah, because there are lots.
There are so many. I'm going to start listing them, and I'm going to miss some. So this is going to be my rider that I'm going to state all kinds of different types of income, but there's going to be more.
Okay.
There's always more.
All right. Fair enough.
Let me just loosen up here a little bit.
All right, loosen up. I'm going to do the same thing. Stretch.
Yep.
Here we go.
So one of the big ones, obviously, if you're on a salary.
Yes.
Or if you're an hourly employee.
Let me ask you this. Sorry to interrupt you. I would assume that salary would be the most common form of income you come across.
I would say it's the most common.
Yes.
Salary or hourly. Those are probably the 2 most common types.
Yeah.
If you're hourly, either you're full-time or you're part-time. If you're full-time, either you're guaranteed hours or you're not. Anytime that someone's hourly, we normally ask for a 2-year average, unless there really is a strong guarantee. So we'd average 2 years of someone's T4s. We typically would get their employer-issued T4s. Not necessarily the T4s that you download from the CRA website, but the ones that your employer gives you, because it has all the good information on there that we need.
Yeah.
And we typically would also ask for a pay stub.
Right. Yeah.
Okay. Salary or hourly?
You're making up words.
I know. I'm just it's hard to get it out now. I don't know.
That's awesome. There you go.
So there's also self-employed.
Yes, that's got to be one of the more complex.
I would say
things.
that is certainly very complex, and we'll talk about that one at the end.
Yeah.
There's pension income.
Yes, which is
very common as well.
Yeah,
so it could be an employer's pension, it could be CVP, it could be OAS.
You'd see a lot of that here, I would think,
in
a government town. Yeah.
A lot. Yep. Yeah. There's also child tax benefit that can be used as income.
Yep.
There is spousal support.
Let me ask you on the child tax benefit as income, though. You would have to be cognizant of the ages of the kids.
Correct.
Obviously.
Typically, the rule of thumb is the kids need to be 13 years old or less.
Otherwise, you
can't. 12 or less is usually
right. Otherwise, they'll age out.
They'll age out. Yeah.
Yeah.
We could also use spousal support.
U.S., and that also could age out.
That could age out as well. So we
Yeah.
need to see how long is that going to be indefinite, or is it only for a
and
certain
has
period of
that
time?
been consistent as well?
Yeah, so that's
Yeah.
another thing we look at. So we'd either get a court order or a separation agreement, but oftentimes we want the bank statements to see if you're actually
Yeah,
getting the money.
paying it. Yeah,
Also, child support.
yeah,
That can also be used as
Yeah.
income.
yeah.
Again, just like child tax benefit, we want to know what the age of the kids
Yeah,
are
that's right.
and that you're actually getting the money.
That's right.
And with self-employment, we'll kind of circle back here. There's so many different types.
Mm-hmm.
One of the main types of self-employment is a sole proprietor. It's very, very common.
Mm-hmm.
You just set up a shingle. It could even be under your own name, and you do any type of business. It could be a professional service. You could be mowing lawns. You could be a contractor. And a sole proprietor would be someone that claims all the income basically through, it could still be a business account, but through their
Yeah.
own name.
Yeah, yeah.
Okay.
Yeah.
Then there could be a partnership. So it's similar to a sole proprietor, but it's maybe a couple people together. Then there would be a corporation. And from a corporation, you would typically get paid either a T4, so similar to a salary,
Yes. Yeah.
or hourly.
Yeah.
Okay. Or you're going to get a dividend, or you're going to get both.
Mm-hmm.
Okay. Typically, when we have a self-employed individual, and if we're going to go to a bank lender, we would do a 2-year average of their income.
Mm-hmm.
So it's a 2-year average of your sole proprietor income, or a 2-year average of your T4 income, or a 2-year average of your dividend income, or a combination of that.
Mm-hmm.
If you don't have a consistent combination, so T4 to T4, dividend to dividend, sole proprietor to sole proprietor, we would need an exception.
Mm-hmm.
Or, fun fact, the government of Canada wants lenders to be more flexible with people who are self-employed. As you know, more and more Canadians are becoming self-employed every day.
Mm-hmm.
So let's say, Todd, you are working in the trades.
Mm-hmm.
So let's say that you're a carpenter and you've worked for a carpenter for 10 years for a contracting company. And then you go and you become self-employed. Lenders typically will allow us to average your previous employment as long as we can prove that you're making consistent income
Mm-hmm.
in a similar type of level with your self-employment.
Right.
So maybe you're only self-employed 6 months or 12 months or 18 months and you don't have a good 2-year average.
Mm-hmm.
We can sometimes get an exception if you've been in that same trade, same industry,
Mm-hmm.
and the income has been consistent previously.
All right. So the most, I guess, the cleanest when you're going to a lender,
Or the easiest.
or the easiest would be obviously the salary, or the working for somebody, basically.
Getting any type of income where you're getting deductions at source is
Yeah.
typically the easiest.
Right. Yeah.
I find the clients that find us the most rewarding and that we're able to help them the most are the people that are self-employed, because I can tell you so many self-employed people
Mm-hmm.
have either had challenges or have been turned down by a lender, and they're kind of gun shy. They're like, ooh, we don't like the banks.
Right. Yeah.
The banks have done me wrong in the past.
Mm-hmm.
And, they need that financial advice. But those I find are more interesting. There's always a story. Yes, there's more documentation, but oftentimes we can really help them.
Mm-hmm.
I had a borrower recently, and there was a loan that was given out to self-employed people called SEBA.
Mm-hmm.
Okay.
Yeah.
This was a loan that the government gave out with the banks. We actually did a refinance on his home to pull some equity out
Mm-hmm.
to pay down
Paid
his
down the
SEBA
SEBA
loan.
Nice.
So
Yeah.
happy. That's just one
Yeah.
little tidbit,
Yeah.
and we were able to help him. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.